Alrighty. Good afternoon, everybody. How's it hanging? How's it hanging? Hope you're all doing well. Hope everybody had a good day. I'm an associate member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRA. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure. What's new? I'm short some JOBY. Got back into some Tesla short. I accidentally kept some KLTO long. Forgot I was even in it. Didn't really mean to, but it's a small position in a super cheap stock. We'll worry about it tomorrow. And I put on that VIX call spread, which I'm a little bit excited about. I don't know. We'll see. So long the August 20th, 25 calls, short the 35 calls. So like 55 cents, and you get two CPI numbers for it and a non-farm payrolls number. So some potential sell catalysts over the course of the next month or so with that. Hopefully, after we get through the remainder of our systematic, never-ending, never-ending, never-ending bid. All right. So considering that today was maybe the largest expected vol control bid ever, the number we saw this morning was $40 billion. I'll circle back to why that full $40 billion probably was not bought. But all the same, the expectation was for $40 billion from vol control today, because today was the day where the 3-month look back rolled off April 9th. So I would say that the largest realized vol days from the beginning of April after today are behind us, but we did still have some big movement over the course of the next week or so in some of these trading sessions. But yeah, that April 9th day, that's the Trump tariff pause day, biggest up day like ever or whatever, one of the biggest up days ever. Rolled off our 3-month look back window, so created a massive systematic bid from vol control. So considering that, we only closed up like a 0.25% in the SPYs today. I see we're down 50 cents from where we closed. So about a 0.25% or so in the SPYs. The Qs are also down around 40 cents from where they closed. They actually closed slightly negative. They're relatively weak all day today. But the real story was the IWM, which is only up 0.5%. It was up a lot more at a certain point. We called the top on that intraday pretty perfectly. I bought those 0DTE IWM puts and made a few bucks off of them. And the other real story is the RSP, which again closed off of highs, but still 0.6%. So today was a real equal weighted thrust higher day. It seemed like there was a big short squeeze ongoing in certain stocks. This morning, the dispersion this morning was particularly crazy. I feel like all I do these days is describe the market as, oh, this is so crazy. Oh, this is so crazy. Oh, this is record setting. And well, partially because it is. But partially because we're chatting about this a little bit on the radio at a certain point, or in the VTF at a certain point today, where I don't remember, like, for most of my trading career, dispersion really ever being a thing to the way it is now. um the options market really seems to control the equity market. And for most of my career, there had always been options trading, but there wasn't zero DTEs, and there wasn't as much derivatives trading as there was now. As we all know, options trading has increased exponentially really since COVID, and that has had just major market impacts. So it's all about market structure related to the options market. And one of the hallmarks of index level um, option selling is a dampening of volatility at the index level, but also an increase in dispersion. So we talk about this a lot, right? If the S&P wants to be flat on the day, you could have Nvidia up 5% and Apple and Amazon down 5% each, and they're, roughly outweighing each other, and the market is flat. Like that's what dispersion is. It's not a great example because what we see in reality oftentimes, but not always, is like all of Mag 7 is up and everything else is down. Or in today's case, most of the mega cap stocks were actually weak, most but not all, at certain points, especially in the beginning of the day. And it was the equal weighted that was rocking and rolling, which that's the opposite of what we usually see, right? Usually we see weaker breadth, and Mag 7 really being the leader and everything else kind of lagging, and again, dispersion, right? But in the beginning of the day today in particular, there were stocks that were all over the place in terms of how they were moving. I'm trying to remember specifically. Remember, Palantir was one, but that wasn't really the craziest one. Palantir had a big rip in the first 5 minute bar. Carvana, that's the wrong symbol. Carvana, CVNA. Carvana had a huge rip over the course of that first 10 minutes. Yeah, ALAB, I know, was on Brandt's list that got bought up and then failed. But was one other really big one. Was it Solar Edge had a big rip in the first 5 minutes? That's still not the one I'm thinking of. Can't remember. There was one other one that was just absolutely, completely herring to the upside in the beginning of the day, and then you had other things that were selling really hard, like a lot of these software stocks, like Net was getting dumped in the beginning of the day. CrowdStrike was getting dumped in the beginning of the day. And interestingly enough, you had like a Nvidia that sold pretty hard in the beginning of the day from that gap up with all the hype that's around Nvidia right now. A lot of these semiconductors actually, look at that first 5 minute candle in Micron. So a lot of dispersion, especially early on in the day. And the Qs versus the IWM is really what I was like watching. It was like, and we've seen this before. I feel like we saw this a bit in 2024. The Qs and the IWM almost seemed like they were trading like perfectly inverse from each other at certain points during the day today. At certain points during the day today, it was almost like on a tick by tick basis, on a 5 minute bar by 5 minute bar basis. If the IWM was trading higher, the Qs were trading lower, and if the Qs were bouncing back, then the IWM was weakening. Definitely not perfect, but look at this opening move over the course of the first 35 minutes in the Qs versus this opening move in the beginning of the day in the IWM. The IWM here at 10:15 is still making highs. It's going straight up. It's not even touching the ADMA on the 5 minute. And the Qs were the opposite, just getting squashed to the downside. And then the Qs bounced back, and the IWM had a little bit of a downtick. They were like literally trading opposite of one another at a certain point in the beginning of the day. And then eventually they started trading a little bit more correlated, a little bit more together, and that direction was up. So, um, really, really interesting day. A lot of dispersion, and the S&P, I believe, did make a new all-time high today and close at a new all-time high. If that's correct. We made a new all-time high. Did we close at it for the SPY? 625 spot 34. 625 spot 43. Yeah. So new all-time high for the SPYs, which is what we expected in the morning meeting today. If anything, the biggest surprise I think about today's trading session is that it wasn't stronger. That is what I think is the biggest surprise. Like I was saying earlier, the vol control bid today was scheduled to be $40 billion to buy. But we've spoken the last few days about how this seems like it's the most telegraphed, systematic bid that I've ever seen. Like, we as a team, we've been talking about market dynamics pretty regularly for some years now. And by the way, it has helped us to call almost every major top and bottom in the market since 2022. But a lot of other people, it's really complex stuff. So you got to be like kind of deep in the weeds of markets to know and care about this type of stuff. Um, I mentioned it earlier when I was chatting in the VTF today, and this is not an insult to my friends over at Benzinga that I love, but I feel like if I ever mention anything when I speak on Benzinga, which is probably like once a month or so, about like market structure and market dynamics, like the host, who's a really good guy, he just knows that his audience, like their eyes are going to be like glazing over when I'm talking about that because it's not what they want, right? What they want is me to tell them the hot stock pick to be able to buy or sell on a day, which you guys know me well enough. Where I have ideas every day, but it's not really my style. Um, so I kind of try to like either avoid talking about that stuff entirely or really, really dumb it down if I'm talking to like a more general mass audience than our team here. But it seems like everybody's been talking about this bid. Everybody knows about it. And what I've been saying here for the last few days is that's interesting because what does it mean? Uh, the systematic bid is systematic. It still has to buy even if people are front running it, but maybe it's not going to be as strong as it would be otherwise because people are front running and selling into it. And also, what we kind of learned a little bit today, which I thought was interesting, was that the systematic bid seems like it can front run itself. So, like, it knows for the last, let's say, week that there is going to be. I mean, how much were we up on this day? 9.5% on April 9th? It knows that in 4 days they're going to roll off a 9.5% realized vol day that's supposed to breed $40 billion worth of SPX buying, but that it's not going to be able to buy $40 billion worth of SPX in one day. And I guess in theory we could have had a 9.5% up day or down day today, but it's extraordinarily unlikely. And if we did have a 9.5% up day or down day today, then I guess that would probably erase the roll off of that realized volatility day from April 9th, and then there would be no bid from vol control for today. But the probability of that happening is extremely low. So I guess just knowing that it almost definitely is going to have to do a lot of buying on Thursday, it knows that on Monday and Tuesday and Wednesday, it might be able to get a little bit of a jump start. So, one of the things that we learned a little bit, I think, this morning is that vol control can front run itself to some degree as everybody else is also front running it. So maybe the impulse of that bid, which certainly I'm sure was there today. I mean, we certainly you could see it to some degree in the price action, just with the way the spies were moving higher, and especially with the way that the IWM or the RSP was moving higher. Um, the bid was obviously there, but we didn't close up so much today that $40 billion of SPX buying. There's no way that happened all today in one shot, in my opinion. Even if people were selling into it because they were front running it or whatever. So we'll see. And the vol control bid is expected to stay with us throughout the month of July, but today really is going to be like the pinnacle day of it. So we're still going to have our strong bid. We still have a positive gamma environment. We still, if you go back to the daily chart and look at the spies, uh, April 10th through, I don't know, at least April 24th had some pretty big wide ranging candles there and some pretty big gaps. I don't know the exact percentage of up and down on each one of them, but as those roll off, it's all going to continue to fuel the vol control bid. But then you can just see as you get into later April and then May and then June, you can see that they start to calm down on those days, and that means that the bid won't be as strong. So there is like a window of weakness potentially around this month's OPEX, which we have to keep in mind. I had read a Goldman Sachs research note earlier in the month or later last month that they said that they were expecting really strong buying up until July 17th, which I think that's the Thursday after the VIX-piration. I think so, right? So next week I think is OPEX, and next Wednesday I think next Friday the 18th I think is OPEX. Next Wednesday is probably VIX-piration. So the 17th is the Thursday. So that Goldman Sachs note that I read said that they were expecting just a really strong underlying bid in this market until basically July 17th. And if you think about that, you understand why, right? We know that when we get to options expiration, that you loosen up that positive gamma. So right now we've got strong positive gamma on the downside that will be supportive of any sell-offs. And as we get later into the month, the vol control bid, while it'll still be there, will begin to slow down. And we're also starting to go into earnings season at that point, which means that the corporate buyback blackout window is on. So you don't have corporates buying in the same way. And when we're in the back half of July, this market might be able to move is more based on actual things like earnings reports and economic data as opposed to just pure market structure. Um, so we'll see what happens. It's part of the reason why I like some of those options plays that we've been seeing, either that kind of VIX call spread that also was recommended in the Goldman Sachs note from this morning, or we've been seeing hit the tape like some of these pretty far out of the money like SPY, QQQ puts that go into like August and September. So it makes me like those for a number of reasons. One is that they include a period of time where the market structurally might be able to go down. And then they also come into a period of time where there could be catalysts. I think some of the key catalysts are still going to be like non-farm payrolls numbers and inflation numbers. I particularly think with increasing importance over time here is going to be the employment numbers. You could see I'm not saying you will. You could see like a shocking July employment number in the beginning of August at a time when you start to go into weaker seasonality, at a time when finally everybody's in the pool, including the systematic bid. We do know that positioning recently has started to really increase back up. That could create a catalyst that could really pay, on the VIX upside or index downside. So we'll see if that comes to play. The biggest thing that I really wanted to watch, like for today's trading session, I thought that today was going to be just such a fascinating day, almost intellectually, was just to see how strong we were able to be with today's vol control bid. Because I've also been saying this for the last day or two, and it was interesting to see the weakness in the Qs. I know again we didn't really close weak today. We closed strong. We closed at all-time highs, and the market technicals still look great. But I just wanted to see, like, was there any chance that we could have closed flat or down on the day? I mean, the Qs did close down on the day. SPYs themselves were barely green, even though the IWM and the RSP were up much bigger. We should have been up huge today when you think about that bid. And the fact that we were only kind of flattish, maybe to me means that the market is starting to run out of some upside steam here. But just because it's running out of fuel to the upside doesn't necessarily mean it's ready for a decline either. Not when you still have that positive gamma, not when you still do have that vol control bid that's coming in as heavy as it is. But that's why if we're beginning to run out of upside steam here, and then we can open up a period of time starting in the second half of July, probably all the way through the end of September, where you have the potential to be able to sell the market down. You have the potential to become weaker. You just need a catalyst to hit. All of a sudden, that actually opens us up to be able to potentially go down. And I'm just saying potentially because maybe there is no downside catalyst. Hell, maybe there's more upside catalyst for all I know. Maybe things are going to continue to go great. We get a ton of trade deals done between July 10th and August 1st, even though we haven't gotten any done in the first 3 months. Maybe we can get a whole bunch done in 3 weeks. Who knows? Maybe some positive catalysts go off and there's no reason for us to sell down. All I'm saying is that we're going into an opportunity where you could. And I would just circle then back to the technicals because the technicals will tell us. I've been saying this since the beginning of June. If we're ever going to sell down, you can have all these reasons why you want to be a short seller on this market. I certainly have them. But if we're going to sell down, you don't have to be short from the absolute high. I think I remember saying this when the SPY was at like 600. And I was like, guys, you don't have to be short from 600 if this is the absolute high. You can be short when the technicals are breaking. The technicals never broke, and now we're at 626, 625. So it's the same deal here. The technicals will break. Eventually, I haven't seen an update on this in a while. I don't know if anybody else has. I like seeing the Goldman's research on the CTA SPX cell triggers, but eventually, at some point, and it tends to happen when everybody's in the pool and the conditions are right for it, but eventually at some point, the market will sell down, and in markets work in feedback cycles. That's the whole thing, right? In the exact same way that this market up move, we spent a lot of time talking about this, has been a feedback cycle of one cohort of buying leading to another cohort of buying. The same thing can happen on the downside, and the more people are in the pool, the more it can feed on itself. You can eventually get the market to sell down to a point where the technicals go from bullish to neutral, and then neutral maybe to bearish, and a CTA sell trigger hits, and the VIX increases, and therefore vol control has to sell, and therefore technical stops are getting hit on the way down, and you go into a feedback cycle of selling. But does that happen at SPY 600? Like I said in that meeting in June? Obviously, now the answer to that is no. Does it happen at 625 where we are now? Maybe. Probably not when you look at the technicals from the moment. Does it happen at 645? Maybe. I don't know. I don't need to know. That's the whole point. I don't need to know. The market will show us when to press it. But I do still like the idea because it's cheap. Circling back to what Pat's note said this morning, which came from Charlie McGilligan, that Charlie likes to say when it comes to like options hedges or buying VIX calls or something like that. Don't hedge when you need to, hedge when you can. And right now, it's very cheap. Like I think it's like that VIX call spread. I think is just super cheap. Goes out till August 20th. Has a lot of potential catalysts in there. To me, that's worth putting that on for a little bit of risk. So I did. And I could build into it further if it gives me the opportunity to, if the VIX continues to weaken. But we are also right now at the point where, from a seasonality perspective, the VIX tends to pivot. So I just like that concept from a seasonality perspective. And that's interesting to me also because we know that August and September tend to be seasonally weak, and July, especially the first half of July, tends to be seasonally strong. So it's interesting that we're right at the point right now where seasonally you tend to see like a VIX bottom, and just knowing history, it looks like that VIX bottom tends to happen before the market goes into some degree of selling. I'm not saying it's going to happen again this time. I'm not saying that at all. I just thought it was super interesting to see. We're not at the point today, tomorrow, where the market tends to top out, but we are at the point where the VIX tends to bottom. So we want to continue to watch to see if there is any sort of deviation, because I know that there already has been a little bit with the VVIX from what Pat's been telling me, but we'll see. That's pretty much all that I've got. From a trading perspective today, some stocks were all over the place. I think it's notable how crazy a few of these stocks are starting to get. Like I started JOBY real small today on the short side. It's just starting to really extend. I know that this company's actually improved a lot with their deals that they're doing in Saudi Arabia and everything with their flying cars. But this was a $5 stock in April. It's a $12.50 stock now. So it's more than doubled, and now it's day 6 to the upside. 3 of these days were starting to be like real acceleration days. So it's a little bit of JOBY small today. I will add to that into an up move. But there's a bunch of others that I think are worth having on the radar that are starting to get a little bit silly and starting to set up for some RDRs. Like QS is another one. If QS can gap up tomorrow, I'm probably going to be looking to short it. Or I think Zillow got a mention. Yeah, Zillow 2 big up days in a row. Get another big up day tomorrow. You might be getting into that RDR territory where it might make sense to into a day 3, day 4 to the upside, begin to short this. I'm sure that there's a bunch of other charts that are out there that look like QS and Zillow and Joby right now. I know SoFi actually broke the high from 2 days ago today. But SoFi was a really good short a couple days ago. I actually did well with it to the short side again today, even though I still had a very small short core from 2 days ago on it. Um, so let's make sure for tomorrow morning, you guys try to do some research for our morning meeting where you can come up with a few of these names that we can have on the radar, because it seems like they're starting to get to that point. And again, it does tend to also be late cycle type of movements. It seems like the short squeeze basket right now is outperforming pretty much any and everything else that you can think of. So that is all that I've got. Yeah, RCAT, whatever RCAT is ripping here. Fox reports Defense Secretary Pete Hegseth has issued sweeping new orders to ramp up drone production and deployment, aiming to fast track capabilities across the military. So it affects RCAT, PDYN, ACHR. All right, cool. Happy to turn it over to you guys for questions. First one here is from David. Do you use the 20, 50, and 200 SMA only on the daily chart to help look for the possible direction of trend? Yes. Yes, that's correct. Also, when you look for and a weekly chart, also you can use them. Your daily chart and larger. When you look for time frame continuity, do you typically look at a minimum of 3 for alignment, and are they the daily, weekly, and 60-minute charts? Um, sure. So time frame continuity, there's a bunch of different ways to look at that. Clearly, you've been watching my afternoon my training program classes, so I appreciate the questions coming from those, and happy to provide the clarity. So one way in which I like to look at it, and I actually don't have a 20 and a 50 right now on any of my daily charts on my current setup. I should. But I can look at a daily chart, and if you have a rising 20 above a rising 50 above a rising 200, you have time frame continuity on the daily chart for the daily chart's small, intermediate, and large time frames. But another way to view time frame continuity is just through bigger and smaller time frames. A 5-minute chart, a 15-minute chart, a 60-minute chart, a daily chart, a weekly chart. Did they all tell the same story? That's another way to be looking at time frame continuity. And again, I mentioned the 5-minute chart and the 15-minute chart, so you can include those as well. And then sometimes you don't have perfect time frame continuity. Maybe you've got a daily and a weekly and a 60 that are moving higher, but you have a 5-minute that's trending lower. When you don't have time frame continuity, something is going to have to change. Either the 5-minute's going to put in a pivot low to continue the trend of the 60 daily and weekly, or the 5-minute's going to continue to go down, and at a certain point it rolls down the 60-minute, the daily, and the weekly. In that situation, the trend of the larger time frame is always higher probability. So in the situation that I just described, 5-minute chart is trending down, daily, weekly, 60-minute are trending up, then there's a much higher probability that the 5-minute eventually pivots and then trends higher. So you could be looking with more conviction at that 5-minute chart to give that pullback to the 8 and 21 EMA, or create a extension pivot low hammer capitulation candle on the 5-minute that then enables it to resume the direction that the bigger picture is originally moving. Hope that helps. Great question. Jerry, with such strong market performance, there are 20-day and 50-day breakouts in individual stocks appearing frequently. What steps would you take to identify the best opportunities? I don't know what you mean by a 20-day and a 50-day breakout in individual stocks. Does that just mean that you're looking back? You have a 20-day look back, so your chart looks like this, and a 50-day look back, so your chart looks like this? Or are you referencing moving averages? I'm not 100% sure. I mean, I can tell you, for myself, I am almost always, just because I think it gives a good amount of back data, start by looking at a daily chart with a 90-day look back, and then I can increase that and decrease that, primarily only increase, to be honest, for more information. And then I can just tell, like, I'm trying to think of a good example. It's probably not the best example because it failed 2 days ago, but like TOST, I don't know if you would consider this to be like a 20-day breakout if it breaks out through 43, because it's, you could look at this for 20 days or whatever, and that's that way. I would just look at the daily chart going back 90 days and be like, oh, there's clear resistance here at 45. Anyway, regardless, a breakout's a breakout. So I feel like, tomato, tomato kind of on that. But what steps would I take to identify the best opportunities? The best breakouts are going to have the other layers of probability. So, you find charts that look like a TOST here with the $45 breakout. I mean, we've had so many of them recently. I know that a bunch of them failed today, but like Roku at 90 with the upgrade we were looking at today with the breakout, or there was a whole bunch of them yesterday. I think that we were looking at as well. Microsoft 500 as like a breakout. So what makes them better or worse? How do you identify the best opportunities? Well, what are your other layers of probability? Is the market on your side of the breakout? The answer is yes. Is the stock having relative strength on multiple time frames on that daily chart, but also on the intraday chart in which it's breaking out? Yes. Okay, great. Is there increased volume in it today? So you have volume confirmation. Yes. Okay, great. Is there news on it? So you're getting an additional catalyst. Like that's why I write them down in the alert section in the morning meetings. I love a technical breakout that is corresponding with an upgrade or an earnings report or some sort of positive news with it. AMD 140, right? Was that today? Was that yesterday? Yeah, AMD 140. It was there pre-market. By the time the market opened, you kind of missed it. But AMD got upgraded today. 140 is the breakout level. It traded on really good volume today. The stock has been relatively strong. It's in the best sector, that semiconductor AI sector. When the layers of probability come together, that makes it a better opportunity than if it doesn't have those layers of probability. So, that's the biggest thing that I'm looking for is those layers of probability when I'm trying to identify the best potential breakouts. From Liam, do you have some type of high volume watch list or something like that to see things that are starting to go? Just curious how people are seeing some of these without having a million stocks up at once. I don't anymore. I used to have a filter, and I don't know why I don't have it anymore. Probably just laziness, which is not a good reason. But I used to have a filter that would flash to me the percentage volume that the stock traded today simply compared to yesterday. So if I saw that it was 9:50 a.m. and the stock has traded 150% of yesterday's volume already in the first 20 minutes, something's going on. And then that would, pop up on my radar per that filter. But I don't have anything anymore with that. It's just kind of, um the whole group here putting together that information, and when we're seeing things moving, I'm constantly just typing stocks up all day. Everything that you guys mentioned, everything that gets mentioned in the meeting, everything that gets mentioned with news, just constantly typing stocks up all day, and seeing the ones where the volume is in or not. From Mike L, DraftKings got an upgrade just now and it's breaking out. Okay, why not? From Dave S, missed the start of the meetings. You might have spoken about this already, but Bitcoin new all-time highs today, based purely on the chart's daily time frame. I think that IBIT measured move could be massive. Do you agree or disagree? Yeah, I totally agree. And if that news that we saw is real today, that China is allowing their citizens to buy crypto again, it is so massive for Bitcoin. It's so massive for Bitcoin. I can't even describe how bullish that is for Bitcoin, in my opinion, if they're allowing Chinese citizens to own crypto again. It's hugely massive. So yeah, crypto, IBIT just starting to break out. It looks like it could have a lot of legs behind it, especially if the broader speculation that we're seeing with everything else continues, and especially if the dollar continues to be weak. Um, Ethereum also has a similar setup. What's the what's the Ethereum or ETHE? Ugh, that's the grayscale ones. Is there one that's not grayscale? I don't like giving grayscale any support ever. Don't buy any grayscale ETFs. Just buy a different one. They're more expensive, higher costs. They're the worst ones that are out there, and we don't like the CEO. ETHA. Yeah, sure. This one potentially breaking out as well. From Liam, would you mind looking at SEZL? Yeah, I don't have much for you on this. It was in a beautiful, strong 45-degree angle uptrend. It got a little bit ahead of itself. It started to break down. It broke that pattern. I don't see anything to do with this. You missed the short. I wouldn't chase this short, but I don't like it long right now either. Maybe 150 is a bit of a level. You could look at 150, but it's just not something I think I would want to be involved with at this time after the pattern broke. Hope that helps a little bit. In Lightspeed, you can add percentage volume change to your watch list settings. Thank you, Michael. All right, cool. Looks like we got through things in the VTF. Let me pop over to the YouTube, see if we have anybody visiting. The mic is fire today. I love to hear it. Where does this vol control info come from? We're able to source it primarily from research from the big banks. More and more banks are publishing this information. So I'm starting to see it come from Bank of America and Deutsche Bank and various places. But Goldman and Nomura are my favorite places to get the information from. Good stuff. And you're making some money. All right. Anybody else have anything for today? Going once. Going twice. All right. Have a great night, everybody. See you all tomorrow.